An important lesson that I've learned over the last few months is that conviction is really important. Even if your conviction is wrong, it's better than having no conviction. So if you have no conviction, you're just going to get tossed around by the waves of whatever the market gives you. And if things go in a direction that you don't expect, you're going to probably make the mistake of buying high, and selling low. But if you have some level of conviction, here's what happens. You buy Bitcoin at $74,000 because you're absolutely sure that it's going up. But if you have conviction in the other direction that we're going to go down, you're shorting at opportune times, and then you're looking for invalidations. But if you have no conviction, that's when you can get really wrecked. And why am I saying this right now? Okay, the reason why I'm saying this is because let's see if this scenario plays itself out. What do we have here from the blockchain backer? Corrective for the time being before the bigger rally happens. Likely ABC, an ABC correction. He's big with Elliott waves. He does lots of things with fibs and Elliott waves and things like that. What we have in front of us could be a potential ABC correction in Bitcoin. But my conviction right now is that crypto is worth holding. And that's the big thing. Absolutely do not want to get shaken out. You can see this fractal here from an earlier time where we saw a similar structure playing itself out to where Bitcoin got to a certain point, almost at its previous all-time high, had an ABC correction, and then pumped. And so maybe that's what's ahead of us too. We got very close to the all-time high, $107,000. ABC correction and then pump. How long would it take itself to play itself out? About, according to this chart, at least like 3 weeks, around 3 weeks. So whatever the deal, my intention right now is to not get shaken out. And so, by the way, good morning, good afternoon, good evening. Would love it if you hit the like button, subscribe to the channel, left a comment in the comment section, all for the algorithm. But let's move on. I'm sure you've seen charts like this. This is from Part-Time Charts, someone who I have a very high opinion of, and someone who I watch. I pay attention to what he says. He only has 4,500 followers on X. So, but I love, there's certain smaller accounts that provide a great deal of alpha. And so I want to contrast this chart that he's presenting with another chart that I think is what is eventually going to play itself out with Bitcoin. And I wouldn't be surprised if Part-Time Charts also has that mindset. So here's criticism. We are early adopters. Quote, we are early adopters. Meanwhile, Bitcoin has produced diminishing returns for 13 years. And you can see this curving structure here with the diminishing returns. And so this might be a discouraging chart. You look at it, it's like, oh no, we're just going to go on forever hanging around $100,000. Well, I would strongly disagree with that. This will eventually break to the upside. I'm quite convinced of that. For example, here's another one that is very small following, 5,500 followers, Bitcoin Prairie at the Gold Prairie. He's very bullish on gold and Bitcoin. Well, here's what Costco looked like from the 80s until about 2010. The 80s until 2010, similar structure, diminishing returns. And then what happens? All of a sudden, it just goes in a 45-degree angle, thereabouts, up. And so what do we see here soon? Every curved or rainbow Bitcoin chart will not matter anymore. Take a good look at the logarithmic chart for Costco. Now look at the Bitcoin chart. Now look at the Bitcoin chart. Let's go back to look at the Bitcoin chart. There we go. Bitcoin is about to go up forever. Laura, I have no idea who Laura is, but this is a similar mindset that I have, that eventually we are going to break this curve and just do our own thing with Bitcoin. There will be probably dramatic moves, especially as Bitcoin gets more and more illiquid, but it's going to go up. The final price for Bitcoin measured in dollars is infinity, because the final price for the dollar is zero. And we keep on going more and more in that direction towards zero. We're 98% of the way there since the creation of the Federal Reserve in 1913. So how much longer do we have to go? Interesting, might be interesting only to me, but hey, here's a good inverse correlator, the Economist. So Economist covers there's a good measure for where you should be as far as, are we bullish or are we bearish? So we have from Bitcoin Data 21 here. Every crypto headline out of The Economist in the last 5 years, turning bullish on CBDCs and DeFi after the previous cycle was pretty much over, now turning bearish on the whole industry again after November 2022. Wonder what they'll turn bullish on /after this cycle tops. Maybe meme coins or AI coins. So here we go. The Economist, pretty much right when it was over, talking about gov coins. Gov coins are the least noticed disruption on the frontier between technology and finance, but they may end up as the most revolutionary. Right before the S hit the F in May of 2021, we have down the rabbit hole. Decentralized finance is one of 3 tech trends disrupting finance, and it has the potential to rewire how the industry works. In our cover this week, we go down the DeFi rabbit hole within a month of the peak, 2 months or so of the peak in 2021. Here we have at the bottom. Isn't that shocking, right? Crypto's downfall. Only a fortnight ago, Sam Bankman-Fried was in the stratosphere, but the high-speed implosion of FTX has dealt a catastrophic blow to an industry with a history of failure and scandals. Is this the end for crypto? It's funny. I got on TikTok. You can see it in my November 10th TikTok. Within a few days of this tweet, within a week, this is November 17th of 2022, I made a TikTok saying I was bullish, and as far as my dry powder is concerned, I am pretty much all in. Hey, that worked out for me. And then, okay, so we're back up. We've pumped again. So The Economist, we should expect a very bullish tweet or article or cover from The Economist, right? Well, crypto once dreamed of being above politics, but now the industry has developed a grubby relationship with the American government and become synonyms with self-dealing. Oh no. So a bearish tweet, but isn't this the peak? Well, maybe, or maybe this is a sign that sentiment is not where it should be in terms of topping sentiment. I would say sentiment is quite low right now, and so maybe that's bullish for Bitcoin, especially when we factor in the fact that give it a couple years, maybe we're going to see something like this happen within a couple years. Maybe we do have a little bit down to go, but soon. Give it a couple years, and this article is going to age like milk. Okay, but here's something that just keeps me up at night. I am not excited about the bond market right now. It's terrifying to me, actually. It is, but how long is it going to take to play itself out? That's the question that I'm just going to be asking myself. This is not a thing that I'm going to worry about for 2025 necessarily. Should we worry about this for 2026? We should worry about this. This is scary. What is this? This is the federal government, the Federal Reserve. What they would love to see is for the 10-year yield, the 30-year yield to not be doing this. They would love for it to come down. Why would they love for it to come down? So that they can refinance trillions of dollars of debt at a lower interest rate, but also that they would have the freedom to lower rates if they wanted to without killing trust in the dollar, So let's see what Part-Time Trader, here's another one from Part-Time Trader. The bond market is in trouble. Deficits run at record levels and rates cannot be brought down without destroying demand for government debt. Interest payments are one of the biggest line items on national budgets. The market will reset. Equities and crypto are going to suffer. I fully agree with this. So the timeline is blurry. This will eventually happen with Bitcoin. But short term, the timeline is blurry. And so this is something we have to navigate. This is something we haven't had to worry about in 40 years. So what does this mean? I mean, man, I just don't know. But I wouldn't be surprised. And this is the scary thing. I wouldn't be surprised if the powers that be would be willing to see the stock market, equities, crypto, all of that. I mean, whatever about crypto, but the stock market for sure. I wouldn't be surprised if they were willing to see those things suffer a great deal, or to bring about some kind of black swan event to where all of a sudden people are fleeing to treasuries again because they need some kind of safe haven. They flee to treasuries, the 10-year yield, 20-year yield, 30-year yield come back down within range, and then they can refinance their debts, or then they can lower interest rates, and then they can turn the money printer back on. But maybe they have one more bullet left in their chamber, but the next time, after whatever comes next, the great debasement of 2025, 2026, 2027, whatever it is, they're not going to be able to do that again without just absolutely murdering us, at least in the United States, you know? So, man, the clock is ticking, guys. The clock is ticking. And what happens next? There's going to be a fleeing. I mean, we're already seeing it, but even more so, a fleeing to gold, and probably a fleeing to Bitcoin as well, where Bitcoin does break free from reliance on short-term, whatever the Federal Reserve decides to do. This current period is very reminiscent of the 1970s. And so what happens? Here's what the 70s looked like. How would you feel if the rest of this decade leading into the early 2030s, we saw the Dow Jones Industrial Average do something like this? And, you know, so short term, maybe we would see a double top. And then boom, big crash, lose 50% of its value. But then, you know, just kind of chop for a while, chop for the rest of the decade, the Dow Jones. And then maybe in the early 2030s, break out of that. That might be what's coming next. I mean, you can see how this played itself out in the 70s. That was extremely volatile, insanely wild. That was just that was insane, man. What if this is next? What if? Now, what would be a thing that would kind of make me think that we're not going to see this is just the dollar right now is much different than it was in the 70s. You know, I mean, that was the early stages of the depegging from gold and the big adjustment that happened as gold rallied throughout the 70s and peaked in 1980. But we're like the 70s on steroids right now. So I would think that what comes next is some form of this, you know, this chop suey right here, but maybe that we would inch a little bit higher throughout the rest of the 20s and into the 30s. So, man, that would be a trip. How do you navigate something like that? I mean, really, you'd be all right if you DCA'd in the stock market at least throughout all of this, and then just had a mentality we're going to hold till the 30s, you know. But that's gonna cause some whiplash. A post that I really liked from Brian Feroldi. Sorry if I mispronounced your name, Brian. But reasons to sell. You know, here's the thing, even though I'm sharing a chart like this, and even though I'm sharing a chart like this, when it comes to stocks at least, I am acquiring. I'm just going to continue to acquire. And here's a long list of reasons to sell. I mean, Ebola virus, do you remember that in 2014? Gold peaks at 1923. Dow falls 1,175 points, biggest point decline ever. What else do we have? Obviously, COVID-19, global emergency, fastest bear market ever, economy shuts down. 2018, I've compared the recent dump to 2018, right? And we are following a fractal very similar to 2018. And what happened in 2018? We entered a bear market, but then we had a V-shaped recovery. So can we repeat the same thing? We'll see. U.S. government shutdown, yield curve inverts. Evergrande, inflation, obviously recently the tariffs, and yet we've continued to go up. And so even if we have something like the 70s, and what's the comparison to the 70s? It's just stagflation, a great deal of stagflation in the 70s. We're probably going to experience a great deal of stagflation now. And so even so, honestly, my mentality is I want to acquire, I want to buy and not sell. Buy and not sell. But I want to stay in. So, and what do we want to buy? Well, here's a couple of suggestions. Now, it is pretty stock heavy in this video, but don't buy small caps. You know, look at this chart here. What's the best option here? Mid caps. Mid caps, sure. Large caps, definitely, absolutely. Stability, all that. Small caps, no, not so much. Another thing that I found to be very fascinating, and this might be something to look into. I might make a short form video on this. Value of $1,000 invested in the best place to work versus the S&P 500 index. So if you invested $1,000 in 2008 into each year's best place to work winners. So let's say in 2008, you bought $1,000 of the best place to work winners. And then in 2009, it was a new list. So you sold those stocks. Maybe some of them were the same. And then you bought the best place to work places in 2009 and just, kept on rotating. Here's your return. It's almost double the S&P 500. Which that should be your aim. I mean, the S&P 500 in itself is good. It does outperform inflation of the dollar, but my goodness, that's fantastic. So something to look into. I might have a BPTW portfolio moving forward here. I have no idea what the best places to work are now, but I'm sure an easy Google search would provide information on that. That's really cool. I want to look into that more. So one more thing, or a couple more things here. Consumers now expect inflation to jump 7.3% over the next 12 months, the highest recording in 44 years. Now, I have mixed feelings about this. Should expectations be so high? On one hand, yes, because if you look at M2 money supply and look at how much it's increased over the last 5 years, sure. Now, the rate of increase of M2 over the last couple of years has been pretty much non-existent. We've just kind of formed a cup pattern, but it makes sense. But on the other hand, looking at Truflation, we're at 1.99%, okay? All right, let's chill out for a second. But on the other hand, this is an overreaction, guys. Come on, you guys, if you believe that we're going to jump 7.3% over the next 12 months, you need to turn CNN off. You need to turn MSNBC off and stop paying attention to people who are trying to terrify you. And with whoever the president is now, obviously we know who the president of the United States is now, Donald Trump, they're trying even more so. They're working overtime to scare you. And this is unreasonable. I am telling you, inflation is not going to be at 9.3% over the next 12 months. At some point, will inflation be at 9.3% or 10%? I think so. But come on. This is an overreaction. All right, last thing, I just thought this was cool. I follow this guy, Option Selling with Christian. I really like his stuff. I'd recommend giving him a follow. But, he invested some money into his toddler's Robinhood account. I didn't know you could do that. A toddler's Robinhood app account. It's now up to $14,000. For those that don't know, we put in $1,600 the day he was born, and then we add $60 per week to it. We don't touch the investments or trade, only add long game for him. So let's say he's 2. I have no idea. Looks like he's 2. $60 a week, that's a little over $3,000 a year, and $1,600 initial investment. So, he's turned $8,000 into $14,000 for his toddler. And I think that's really cool. So I wonder, I just don't know how he did that. Did he create a separate Robinhood account for his toddler? I don't know, but that's really neat. So anyway, where are we with Bitcoin? 104,347. I hope you bought the dip. This is at the moment that I'm making this video. There was all that the Moody's downgrade fear. I tweeted out about that. I said, let us all be afraid until the stock market opens, and then let's buy the dip. Let the paper hands get out of here, and then let's buy the dip. And it looks like the dip is being bought up. It got down to the lower 102s on Monday, early Monday morning in the United States at least. And now as of the making of this video, it's at 104. You guys should know by now. It's like, what's the next thing that's going to scare you? Don't see that as a reason to sell. Buy the dip. Buy the stupid dip. Now, Bitcoin dominance, we're getting close, guys. We're getting close to a point where it's like, I don't want to see this go all that much higher. There's still plenty of room. Now, very short term, I'm kind of encouraged by seeing some evidence that Ethereum is not as weak as it was the last few days. So we'll see, got up to the golden pocket of swing low to swing high here. Maybe that's it. If it were to get beyond a 786 retrace for Bitcoin dominance, I would not be too excited about that. I will fully admit it. So let's see what's trending on coinmarketcap.com. Fartcoin is back. Yes. I want to create like a parody account called Fartcoin Maximalist. That would be funny. We have Trump Coin, Sky AI. We have NXPC. Don't know what that is. Obviously Bitcoin. Don't know either of those. ETH, Fear and Greed Index at 71. Altcoin Season Indicator 25. Plenty of room to move higher. XRP 234. Binance 641. Solana 163. Dogecoin 22 cents. All right, let's do this. Let's see more of an altcoin move than what we've just seen here. And that's what I think is coming. So anyway, that is all I have for today. I hope you have a wonderful day. Wonderful rest of your week. I will most certainly be seeing you in another video.